So I just want to let you know that we will be recording this session, so it could be posted on our website at a later date. And I welcome everyone to our third session for Financial Literacy Week. It's Student Loan Repayment, TPD, and Forgiveness Programs. I'm Judy Anderson. I'm from Financial Aid. I'm the Debt and Default Advisor, as well as the Financial Literacy Specialist. And we have some special guests with us today from Pathways. So I'll let you both introduce yourselves. Thomas, do you want to go first? Or?
Yeah, hi, I'm Thomas Lucero. I am the Professional Studies and Public Service Pathway Advisor.
Great, thank you, Thomas. Layla?
Hi, I'm Layla. Sorry, my camera's okay. I'm Layla. I'm the new part-time PSI advisor.
And do you work at the Lowry campus or?
I work at the Center Tech.
Tech? Okay, great. Thank you. So welcome.
Thank you.
All right, so let's get started. So today we're talking about student loans and when your repayment is going to start. So the example here is if you're in school and you're going to be graduating in May of 2023, then your repayment period begins on November of 2023. So you have 6 months there between when you graduate and you have to make your first payment. So understanding your federal student loan obligations. So yes, you have to repay back your student loan, even if you don't complete the program or don't complete the program within the regular time for the program completion. You aren't able to obtain employment upon graduation from your program, or you are dissatisfied with or don't receive the education or other services purchased from the school. So what happens during this 6 months grace period? So when you finish or leave school, you'll enter your grace period. A student loan period is a stretch of time after you've graduated or leave school when you're not required to make payments. So all federal loans, except federal Perkins loans, the grace period is 6 months. For the Perkins loans, it's 9 months. After this time, you will enter repayment. So if you resume enrollment on or at least a half-time basis before the end of the 6 months grace period or deferment, your federal student loan will return to an in-school status or deferment, and you will be eligible for a full 6 months grace period or deferment when you leave school again or drop below half-time, which is 6 credits. So if you're just going to come for the summer and you're taking 3 credits, you should let your lender know that you're going below halftime and you are continuing with school, so they don't automatically start that 6 months the 6 months clock on your grace period. And then parent borrowers of PLUS loans must specifically request a PLUS loan deferment while the student for whom they borrow is in school and during the 6 months period after the student leaves school, because that's generally parents have to pay on the loans immediately. Any questions on the grace period? Okay, so we're going to move on. So the frequently asked questions about interest is, can I lower my interest rate? So with student loans, it's a fixed rate, meaning that when you take out the loan, whatever the current interest rate is during that time period will be your interest rate for the entire life of your loan. And the only potential way to lower it is if you do a consolidation which means that you bundle all of your loans together into one loan, so you only have one payment to make. So it's possible that interest rate could be lower. So you might have to check into which is better for you, the interest rate on all of the loans separately or consolidating them into one. And then how is the interest rate set? So it's set annually by statute with the federal government. So every July 1st, the federal government determines what the federal direct loans interest rate will be. And it will be that interest rate all the way through June 30th of the following year. So again, is my interest rate fixed? And it will be fixed for the life of the loan. And how can I save money on my loan? You can save on interest by making payments where they're not required and keeping interest from accruing. So what happens if you make, or excuse me, if you miss a payment? You should try to make the payment right away. So if you're a few days delinquent on the payment, try to get it paid right away. And you probably should call your lender servicer to tell them that you were late, so it's not going to affect anything on your account. Because if you let it go for too long, there's a possibility after 270 days, it'll go to default. So you don't want to ever be that late on a payment. But if you're having trouble paying on your loans and you are late, there's a few things that you can do. One would be, like I said, contact your lender servicer and talk to them about maybe changing your loan repayment plan to something like an income-driven repayment that could give you lower payment options, or change the payment date. If you can't make it on the first of the month, change it to maybe the middle of the month. So don't be afraid to call your lender servicer and ask them what they can help you with. But if something happens and you want to put a delay on making payments, then you could see if you qualify for a forbearance. So a forbearance is another option for temporarily postponing or reducing your loan payments if you do not qualify for the deferment, which we'll talk about on the next slide. But it allows you to temporarily stop making payments or reduce your monthly payment. Interest will still continue to accrue and it will be charged, but you don't have to pay it during that time period when you are in forbearance. So at the end of the forbearance, the next day, the interest during that time period is going to be capped onto your loan. So that's what capitalized interest is. So it doesn't show during the forbearance period, but it gets added to your balance once that period is over. So the pros for this is you can stop making payments. But the cons is you will probably owe more in accrued interest once the forbearance is over. And it does not count toward public service loan forgiveness. And it does not count toward forgiveness under an income-driven repayment plan. So make sure when you're talking to your lender servicer, you know all of these options and what they mean. Okay, now we're going to talk about a deferment. So it's very similar to the forbearance. So the pros with this is you can stop making payments for up to 3 years. So it's a little longer period than what would happen with a regular forbearance. That's usually just a few months. But also, if you have subsidized student loans, you usually don't have to pay the interest that accrues while those loans are in deferment. You can stop making payments for as long as if you're going through cancer treatments, you could go up to 6 months after it ends if you're going through something like that. And for nearly all loans, regardless of whether they are subsidized, you don't have to pay the interest that accrues while the loans are in deferment. And it qualifies for forgiveness under an income-driven repayment plan. Now, the cons would be interest may continue to accrue. It does not qualify for forgiveness under the Public Service Loan Forgiveness Program. It does not qualify for forgiveness under an income-driven repayment plan or the PSLF unless your reason for deferment is economic hardship. Anybody have any questions so far? All good? Okay. So if something really bad happens and you get to that 270 days of not being able to pay all your loans and you don't have any deferments or forbearances, you will go into default. So that means that you're not going to be able to get any more federal aid if you do need it for future classes. And your lender servicer can ask for a wage garnishment from your employer. So they could take up to 15% of your income from your employer's, the money that you make from your employer. So if you get paid, twice a month or once a month, they'll take that 15% out of whatever check that you get. And then also, if you have a tax return, the government can go in and take those funds from you. So if you have a federal or a state income tax refund, they'll be able to intercept that and take that as your payment if you're in default status. Any questions with default? Okay, so the ways of getting out of default, well, try to avoid it if you can. But if something happens and you do go into default, you have three options. You could do the loan rehabilitation program, which you have to do an application with your lender servicer, and you have to make 6 to 9 consecutive payments on your account to show, in good faith that you're going to pay the loans before they'll take them out of default status. Or it's a little quicker if you do the loan consolidation. So you can consolidate all of the loans in default into one, like we talked about earlier, and start making a single payment on the new direct consolidation loan. Or if you have the money, you could just pay the whole balance on all your loans off in full. But with coming to school, if you're still taking classes, and as long as you're in default status, you won't be able to get any financial aid. And that includes Pell. You have to, like if you're doing the loan rehab and you're making the 6 to 9 payments, you have to complete all the payments and then receive a letter from the lender servicer saying that you are out of default and that you could start getting financial aid again. So unfortunately, you wouldn't be able to attend unless you want to pay out of pocket, because there would be no financial aid available. Any questions? Okay. Okay, so there's types of student loan forgiveness or discharge that you could apply for if something comes up along the way. So total and permanent disability is one of them, and it's normally called TPD. So this happens if something drastic happens and you're injured and you can no longer work. So you would either contact the Department of Veteran Affairs to get documentation, or the Social Security Administration, or a letter from your physician saying that you can no longer work and earn income. So if this should happen, you can call the company here called Nelnet and click on this link and do the application, and they could see if they can approve you. Or you could call their phone number if you need assistance. So all this information will be put onto our website. So if you ever need anything, you can go back and look at it. And then there's something else called the Public Service Loan Forgiveness. It's available for the direct loans. And this is if you're in a job, like a government job, or you're a fireman, a policeman, you work for, you're a secretary in, a government office, something like that. You could qualify for the Public Service Loan Forgiveness. When you do this though, you have to have made 10 years of payments. So it's not going to happen right away. You had to have been paying on your loans. And there's a lot of things that you have to make sure that you keep qualifying for over a period of time. So if you want to see if it's something that's going to work for you, then you can go to studentaid.gov and learn more about the Teacher Loan Forgiveness Program. Sorry, I skipped one. Let me go back. And then there's also the Teacher Loan Forgiveness Program. It's similar to the public service, but you have to be teaching and making payments for the 10 years. So they could forgive up to $17,500 on your direct loan. So both can be found on studentaid.gov. Any question about the forgiveness programs? Okay. So now I'm going to open it up to Thomas and Layla to see if there's anything that they wanted to add, if student experiences, or if they've had any experiences with their student loans. Feel free to ask anything. And then if you have any questions for all of us, we can answer those now as well.
Mine is more so my experience, I haven't started paying back my student loans, but I've gotten an email saying that it's almost time.
I'm sorry, Layla, you're kind of echoing.
Oh, I don't know why my computer does that. Maybe. Okay. Am I still echoing?
Still's doing it, yeah.
Okay, I don't think there's any fixing it yet right now.
Do you want to chat or?
Yeah, I'll do that.
Okay, thank you.
Just as for me and sharing my experience going through college and using loans, I use loans in my bachelor program more so than just my associate's program. And once I finished my bachelor program, I actually started a master's program right away. So my loans were deferred until I finished my master's program, actually. And one of the biggest pieces of advice is if you can pay more for each of your payments, it will help you pay off your loan sooner than later. But as for me, that's probably just the biggest piece of advice that I could offer is, yeah, paying more on your loans each payment period. Does anyone have any questions about anything?
I have a question. So Thomas, you were saying that your loans didn't start until after your master's program. So when you originally got your loans, did you just tell them that you want to continue your loan the loan process throughout your master's, or how does that work? You have to apply for both programs, or?
Yeah, good question. Actually, I did not know if I was going to further my education after my bachelor's degree. So it wasn't until like my last semester of my bachelor's degree that I got into a master's program. So basically, I let them know at that point that I would be continuing my education, and that's how they got deferred until after my master's.
Okay, thank you.
Yes, as long as you're consistently in school, there's no breaks. You don't have to pay on your loans. So you could go like Thomas did all the way through to his master's program and without having to start paying on your loans. So.
Okay, thank you.
Mhm. Any other questions, or Layla? I'll mute my mic, Layla, to see.
Did this help it? Is it still echoing?
Okay. Do we have any other questions? Right, so Layla, do you have previous student loans? Okay, how'd you start paying on them? No, okay. Yeah, so right now, the federal government, since COVID, since March of 2020, the CARES Act put a hold on any student repaying their student loans. So right now it's 0 payments and 0 interest occurring on any loan. So it was supposed to end on May 1st, but the president, excuse me, extended it now to August 31st. So we don't know if there's going to be another extension. They keep saying this is the final one, but it keeps happening every few months. So it's possible the extension could go until December 31st of this year. We'll just have to wait and see. We're hearing from the White House that President Biden may start looking at canceling student loans if you have a balance now for at least $10,000. So it's too early in the game right now to know if this is going to happen, but that's kind of what the rumor is. That's why, the delay is happening again, so he could work on something like that. But that's just, rumor right now, so we don't know what's going to happen. But at least if you have student loans already, nothing's accruing. There's 0 interest, so you're saving a lot of money. Okay. All right. So are there any other questions, or?
I just sent another question.
Uh-huh.
It's in the chat. I don't want to keep talking.
Yeah, I'm looking at it now. Let's see. So you're going back to school come August. No, since you're going back to school, you don't have to. You could take the summer off. That's fine, because they don't really count summer as a semester. So like if you went in spring but skipped September, the fall semesters, then you would have to call your lender servicer to let them know you took a break and you're taking a semester off. But if you keep going semester after semester like that, you'll be fine. Okay, well, if nobody else has any questions or words of advice from Thomas or Layla. I appreciate partnering with our Pathways advisors, and if there's anything that you need, you can always call them or myself, and we can answer any question for you. So I thank you for attending. Oh, and Anita and Brittany, I don't have your information listed for attending the course. So if you could, I'll give you my email in the chat. And if you could send me your student ID number, I'll put you in for the raffle. That'll be on Friday afternoon.
Okay, thank you.
Okay, thank you.
So it's there now. All right, well, I thank everyone for attending. And Myrna, did you want to hang on and we'll talk about the cash course? Okay, well, thanks, everyone. Have a good day. Bye-bye.
I was looking for your email. I didn't get your email.
It's Judith.Anderson@ccaurora.edu.